Based on the historical data and forecast, Bitcoin is exhibiting a downtrend. The price has consistently made lower highs and lower lows, and the forecast indicates continued downward pressure. The RSI is currently below 50, suggesting a bearish momentum, and the Bollinger Bands are widening, indicating increased volatility and potential for further declines. Therefore, I recommend a short selling strategy. We will initiate a short position at $86,200, placing a stop-loss order at $87,400 to limit potential losses if the price unexpectedly reverses. The target price for this short position is $84,200, based on the support level of $86,700 and the downward trend. To refine this strategy, we will incorporate the RSI and Bollinger Band signals. When the RSI falls below 30, it indicates an oversold condition, which could signal a potential bounce. Conversely, when the RSI exceeds 70, it suggests an overbought condition, potentially leading to a pullback. Given the current forecast and the downtrend, I propose a conservative approach. We will maintain the short position as long as the price remains below the upper Bollinger Band and the RSI remains below 50. If the RSI reaches 30, we will reduce our position size to manage risk. The final portfolio will be a 70% short position with a stop-loss at $87,400 and a target price of $84,200. Based on the historical data and forecast, Ethereum has shown a downtrend recently, with a significant drop from January 13, 2026, to January 26, 2026. The forecast for the next week indicates a continuation of this downward trend, with prices expected to fall from $29.10 to $27.80. The RSI consistently remains below 50, indicating a bearish momentum. Considering the Bollinger Bands, the price is approaching the lower band, suggesting a potential oversold condition, but the downward trend remains strong. Therefore, I recommend a short position strategy. The entry price will be $2,780, with a stop-loss placed at $2,840 to protect against a potential bounce. The initial target price will be $2,700, aiming to capitalize on the continued downward momentum. To refine this strategy, I'll incorporate the RSI and Bollinger Band signals. When the RSI dips below 30, indicating an oversold condition, and the price touches the lower Bollinger Band, it suggests a potential short-term rebound. However, given the overall downtrend, I will maintain a short position. The entry price will be $2,780, with a stop-loss at $2,840. If the price reaches $2,700, I will take partial profits and adjust the stop-loss to the entry price, allowing the position to run further if the downtrend continues. This combined strategy leverages the overall trend while incorporating short-term signals for risk management and profit optimization. Based on the historical data and forecast, BNB shows a downtrend, with a recent bounce from the support level of $878. The RSI indicates that the asset is currently in neutral territory, fluctuating between 40 and 70. The Bollinger Band suggests that the price is nearing the lower band, indicating a potential for a short-term bounce. Considering these factors, I propose a contrarian strategy focusing on short-term gains. We will enter a long position at $874, placing a stop-loss at $870 to limit potential losses if the downtrend continues. The initial target price will be $881, aiming to capture a quick profit from a potential bounce. To refine this strategy, we will incorporate the RSI and Bollinger Band signals. If the RSI drops below 30, indicating an oversold condition, we will initiate a long position at the prevailing price, with a stop-loss just below the lower Bollinger Band. Conversely, if the RSI reaches 80 or above, signaling an overbought condition, we will consider a short position. For this particular scenario, given the current price action, we will stick with the initial long position. If the price reaches $881, we will consider moving the stop-loss to break even to protect profits and potentially extend the target price to $887 if the upward momentum continues. This portfolio prioritizes quick profits and risk management, aligning with a high returns investment approach. Based on the historical data and forecast, XRP shows a downtrend with fluctuating volatility. The RSI consistently hovers around the mid-range, occasionally dipping below 40, indicating oversold conditions but failing to reach overbought levels. The Bollinger Bands show that the price has been fluctuating within the bands, suggesting periods of consolidation. Considering these factors, I propose a strategy focused on capitalizing on short-term bounces within the downtrend while managing risk carefully. My recommended portfolio strategy involves a combination of RSI and Bollinger Band signals, with support and resistance levels as additional confirmation. First, initiate a long position at $1.83 when the RSI falls below 40, indicating an oversold condition, and the price touches the lower Bollinger Band. Set a stop-loss order at $1.78, just below the lower Bollinger Band, to limit potential losses. The initial target price is $1.9, aligning with the resistance level. If the price reaches $1.9, consider moving the stop-loss to the entry price of $1.83 to secure profits and protect against a potential reversal. This strategy aims to capture short-term gains within the prevailing downtrend, utilizing technical indicators and support/resistance levels for precise entry and exit points. Based on the historical data and forecast, Solana demonstrates a clear downtrend, particularly evident in the recent price action and the projected decrease over the next week. The RSI consistently dips below 50, reaching as low as 32.9 on January 26, 2026, indicating oversold conditions. The forecast data projects further declines, with prices falling from $123 to $115. Therefore, I recommend a short position strategy. Entry price will be $123, with a stop-loss placed above the upper Bollinger Band at $146. The initial target price will be $115, aligning with the forecast. To refine the strategy, we can incorporate the RSI and Bollinger Bands. When the RSI falls below 20, indicating a strong oversold condition, and the price is near the bottom of the Bollinger Bands, it presents a high probability shorting opportunity. I suggest entering a short position at $120, with a stop-loss set at $148, just above the upper Bollinger Band. The first target price is $118, corresponding to the forecast and a conservative profit target. If the price continues to decline, the second target price will be $115. This combined strategy leverages both technical indicators and forecast data to maximize potential returns while managing risk effectively. Based on the historical data and forecast, TRON shows a downtrend, with the forecast prices consistently below the recent closing prices. The RSI values have fluctuated significantly, but recently dipped below 50, indicating potential oversold conditions. The Bollinger Bands show that the price has been approaching the lower band, suggesting a possible bounce. Considering these factors, I recommend a contrarian strategy, aiming to capitalize on a potential short-term rebound. We will initiate a long position at $0.295, coinciding with the support level. A stop-loss order will be placed at $0.293, just below the forecast price, to limit potential losses if the downtrend continues. The target price will be set at $0.306, the recent resistance level, aiming for a profit of $0.011. To refine this strategy, we will incorporate the RSI and Bollinger Band signals. If the RSI rises above 20, confirming an oversold condition, it strengthens the entry signal. Simultaneously, if the price touches the lower Bollinger Band, it further validates the potential for a bounce. However, if the RSI remains below 30 or the price breaks below the lower Bollinger Band, we will exit the position immediately. This combined approach balances the contrarian view with technical indicators, optimizing risk-reward. The portfolio will be 60% long TRON and 40% in cash to manage risk. Based on the historical data and forecast, Dogecoin has been in a downtrend, with a clear support level at $0.119 and a resistance level at $0.149. The RSI has consistently remained below 50, indicating a bearish momentum, and the forecast suggests a continued downward trajectory, with prices potentially reaching $0.118. Considering these factors, I recommend a short selling strategy. The entry price should be $0.124, placing a stop-loss order at $0.127 to limit potential losses if the price unexpectedly reverses. The initial target price should be $0.119, aligning with the established support level. To refine the strategy, we will incorporate the Bollinger Bands. The price has been consistently trading near the lower band, reinforcing the bearish outlook. If the price touches the bottom of the Bollinger Bands, which is around $0.115, we can consider taking partial profits and moving the stop loss to the center of the Bollinger Bands, approximately $0.134. The final target price should be $0.118, based on the forecast data. This combined RSI and Bollinger Bands approach provides a layered risk management and profit-taking strategy, maximizing potential returns while mitigating downside risk. Based on the historical data and forecast, Cardano demonstrates a downtrend with increasing volatility. The RSI consistently fluctuates below 80, indicating the asset is not overbought. The recent RSI values, particularly the 37.2 on January 26, suggest a potential oversold condition. Considering the forecast prices, which predict a continued decline, and the support price of $0.339, I recommend a contrarian strategy focused on anticipating a short-term bounce. We will implement a buying strategy when the RSI dips below 20, with an entry price of $0.334, a stop loss set just below the support level at $0.32, and a target price of $0.36, aiming to capture a rebound towards the resistance level. To refine this strategy, we will incorporate the Bollinger Bands. When the price touches the lower band of $0.334, confirming an oversold condition, we will enter a long position. The stop loss will be placed at $0.32, just below the lower band, to protect against further downside. Our target price will be $0.36, aligning with the resistance level and a reasonable profit margin. This combined RSI and Bollinger Bands approach seeks to capitalize on short-term price fluctuations while mitigating risk. This portfolio is the most efficient strategy to achieve high returns. Based on the historical data and forecast, Bitcoin Cash demonstrates a downtrend, with the forecast prices consistently below the recent closing prices. The RSI values fluctuate between 39.9 and 48.9, indicating periods of oversold and overbought conditions. Considering the support price of $571 and the forecast showing a continued decline, I recommend a short position. The entry price should be $572, coinciding with the first forecast price. A stop loss should be set at $577, just above the most recent high of $571, to protect against a sudden price reversal. The initial target price is $555, aligning with the lowest forecast price. To refine this strategy, we'll incorporate Bollinger Bands. When the price touches the lower band, it signals a potential oversold condition, reinforcing our short position. Given the downtrend and the forecast, the RSI is currently trending downwards. I suggest adjusting the target price to $562, based on the forecast price on February 2, 2026. This strategy combines technical indicators and price forecasts to maximize potential returns while managing risk. The portfolio will be 70% short Bitcoin Cash, 20% in cash, and 10% in a stablecoin like USDT to hedge against volatility. Based on the historical data and forecast, Wrapped Beacon ETH has shown significant volatility with a recent downtrend. The RSI consistently dipped below 40, indicating oversold conditions, and the price has tested the support level of $3,060 multiple times. The forecast suggests a continued downward pressure, with prices fluctuating between $3,100 and $3,220. Considering these factors, I recommend a long position strategy when the RSI reaches an oversold level of 20 or below, specifically around $3,100. Place a stop-loss order at $3,060, just below the established support level, to mitigate potential losses. A reasonable target price would be $3,220, aligning with the upper end of the forecast range and a potential bounce from the recent decline. To further refine the strategy, we will incorporate the Bollinger Bands. If the price touches the lower band around $3,100 while the RSI is oversold, it strengthens the buy signal. The target price of $3,220 is determined by the upper Bollinger Band. This combined strategy offers a balance between momentum and volatility indicators. The portfolio will prioritize the combined strategy of RSI and Bollinger Bands, as it provides a more robust signal and risk management framework. This approach aims to capitalize on the anticipated rebound from oversold conditions while limiting downside risk with a well-defined stop-loss. Based on the historical data and forecast, Ether.fi shows a downtrend, with the price consistently declining over the past 2 weeks and forecast to continue decreasing. The RSI consistently remains below 50, with several days dipping below the oversold level of 20, indicating significant selling pressure. The price is currently near the support level of $0.568. The Bollinger Bands are narrowing, suggesting decreasing volatility. Given this bearish trend, I recommend a short position strategy. We will enter a short position at $0.589, placing a stop-loss order at $0.646, just above the lower Bollinger Band, to limit potential losses if the price unexpectedly reverses. The target price will be set at $0.553, aligning with the forecast price and providing a reasonable profit margin. To optimize returns, I propose a portfolio combining a short position with a conservative approach. Initially, enter a short position at $0.589 with a stop-loss at $0.646 and a target of $0.553. If the price reaches the target, consider scaling out of the position gradually to secure profits. If the price hits the stop-loss, reevaluate the market conditions and adjust the strategy accordingly. The RSI and Bollinger Bands suggest a continued downtrend, so maintaining a short bias is prudent. This combined strategy balances risk and reward, aiming for high returns while mitigating potential losses in the current market environment. Based on the historical data and forecast, Pepe has been trending downwards with sideways movement over the past 2 weeks. The RSI consistently hovering between 40 and 66 indicates weakening momentum, but not yet oversold. The Bollinger Bands show periods of volatility, with the price occasionally touching the upper band, but generally staying within a narrow range. The forecast for the next week suggests continued sideways movement around $5.06 to $0.0000530. Given this analysis, I recommend a cautious long strategy, capitalizing on potential minor rebounds while mitigating downside risk. My strategy involves entering a long position at $5.06. The stop-loss should be set at $0.0000470, aligning with the established support level to protect against further declines. The target price for this trade is $0.0000580, the resistance level. This strategy combines RSI, Bollinger Bands, and support/resistance levels for a balanced approach. The RSI is above 50, so there's no need to enter a short position. The Bollinger Bands are relatively narrow, indicating low volatility, which supports a conservative target price. This strategy aims for a moderate profit with a defined risk management framework. Based on the historical data and forecast, just shows a generally upward trend, although with some volatility. The RSI has fluctuated, spending time both above and below 50, but recently climbed above 60, suggesting strengthening momentum. The Bollinger Bands have been widening, indicating increased volatility, and the forecast prices consistently remain above the recent close prices. Considering these factors, I recommend a long position strategy. We should enter a long position at $0.0453, placing a stop-loss order at $0.0447, just above the support level, to limit potential losses. Our initial target price should be $0.0477, aligning with the forecast price for February 2, 2026. To refine the strategy, we'll incorporate the RSI and Bollinger Band signals. If the RSI drops below 30, indicating an oversold condition, we'll consider averaging down by adding to our position at $0.045. Conversely, if the price touches the upper Bollinger Band, suggesting overbought conditions, we'll take partial profits at $0.0468. The final target price will be $0.0477. This layered approach combines trend following with reactive adjustments based on technical indicators, maximizing potential returns while mitigating risk. Based on the historical data and forecast, Algorand has shown a fluctuating trend, with support at $0.115 and resistance around $0.132. The RSI has been oscillating between oversold and overbought levels, indicating a period of consolidation. The Bollinger Bands show that the price has been trading within a range, with the lower band consistently near the support level. Considering these factors, I recommend a moderately bullish strategy. We will enter a long position at $0.118, anticipating a bounce from the support level and a move towards the resistance. A stop loss will be placed at $0.115 to protect against a potential breakdown, and the initial target price will be set at $0.13, aligning with the resistance level. To refine this strategy, we will incorporate the RSI and Bollinger Bands. If the RSI falls below 20, indicating an oversold condition, we will consider entering a long position. Conversely, if the RSI exceeds 80, suggesting an overbought scenario, we might consider exiting the position or initiating a short position. The Bollinger Bands can provide further confirmation. If the price breaks below the lower band, it could signal a potential downward trend, prompting us to exit the long position or adjust the stop loss. If the price breaks above the upper band, it may indicate a strong upward momentum, potentially leading us to raise the target price to $0.132. This dynamic approach will allow us to adapt to changing market conditions and maximize potential returns. Based on the historical data and forecast, Morpho shows a downtrend with increasing volatility. The RSI consistently dips below 50, indicating a bearish momentum. The forecast prices for the next week are around $1.22 to $1.21, further confirming the downward trajectory. Considering the support price of $1.15 and the current forecast, I recommend a short position strategy. We will enter a short position at $1.25. The stop loss should be set at $1.27, just above the upper Bollinger Band, to limit potential losses if the price unexpectedly reverses. The initial target price is $1.15, aligning with the established support level. To refine this strategy, we'll incorporate the RSI and Bollinger Bands. When the RSI falls below 30, signaling an oversold condition, and the price is near the upper Bollinger Band, it suggests a potential shorting opportunity. Therefore, if the price reaches $1.27 and the RSI is below 30, we will enter a short position at $1.27. The stop loss will be set at $1.29, and the target price will be $1.15. This combined strategy offers a balance between trend following and technical indicators, aiming for high returns while managing risk effectively. Based on the historical data and forecast, Chiliz shows a mixed trend with periods of volatility. The RSI consistently fluctuated above 50, reaching overbought levels near 80, suggesting potential pullback. The Bollinger Bands indicate price movement within a range, with the price occasionally touching the upper band. Considering the forecast, the price is expected to remain relatively stable around $0.055 to $0.059, with a slight upward trend. Therefore, a combined strategy leveraging RSI, Bollinger Bands, and support/resistance levels will be employed. The proposed strategy involves a long position with an entry price of $0.0555. The stop loss will be set at the support level of $0.0498 to limit potential losses. The first target price will be the resistance level of $0.0621, aiming for a quick profit. If the price reaches the first target, a trailing stop loss will be implemented at $0.06 to secure profits while allowing for further upside. The second target price will be $0.065, capitalizing on a potential breakout. This strategy balances risk and reward by utilizing technical indicators and key price levels to make informed decisions. Based on the historical data and forecast, Pump.fun shows a slightly upward trend with periods of volatility. The RSI consistently fluctuates, but generally stays above 50, indicating a neutral to slightly bullish momentum. The Bollinger Bands have been widening recently, suggesting increased volatility and potential for price swings. Considering the support price of $0.0024 and resistance of $0.00274, a strategy combining RSI and Bollinger Bands is recommended. We will implement a long position when the RSI dips below 50 and the price touches the lower Bollinger Band, indicating a potential oversold condition. The entry price for this long position will be $0.00265, coinciding with the forecast price and the lower Bollinger Band. To manage risk, the stop loss will be set just below the support price at $0.0023. The target price will be set at the resistance level of $0.00274, offering a reasonable profit margin. This strategy aims to capitalize on the anticipated upward trend while utilizing the RSI and Bollinger Bands to identify optimal entry and exit points. The portfolio will allocate 60% of the capital to this long position, 30% to a similar strategy with adjusted risk parameters, and 10% to a conservative holding position. Based on the historical data and forecast, Maple Finance demonstrates a downtrend, consistently testing the 0.33 support level. The RSI readings fluctuate, but generally remain below 70, indicating a lack of strong bullish momentum. The Bollinger Bands show the price frequently touching the lower band, further supporting the bearish outlook. Considering these factors, I recommend a short position strategy. The entry price should be set at $0.332, coinciding with a slight bounce from the support level. A stop loss should be placed at $0.341, just above the recent high, to limit potential losses if the price unexpectedly reverses. The initial target price should be $0.319, aligning with the forecast and the lower Bollinger Band. To maximize returns and manage risk, I propose a tiered target strategy. Once the initial target of $0.319 is reached, we will move the stop loss to the entry price of $0.332, effectively turning the trade into a break-even position. Subsequently, the second target price will be $0.308, capitalizing on further downward momentum. This approach allows us to secure profits while mitigating downside risk. If the price continues to fall below $0.308, we can reassess the situation and potentially extend the target further, but with caution, as the support level of $0.33 may act as a strong resistance. Based on the historical data and forecast, Zcash has shown a downtrend, with the price fluctuating between the support of $329 and the resistance of $421. The recent RSI values have been oscillating between 33.6 and 49.8, indicating periods of oversold and overbought conditions. The Bollinger Bands have been contracting, suggesting decreasing volatility. Considering the forecast for the next week, the price is expected to continue its downward trend, reaching as low as $327. Therefore, I recommend a short position strategy. We will enter a short position at $349, placing a stop-loss order at $357 to limit potential losses if the price unexpectedly reverses. Our target price will be $327, aiming for a profit of $22 per coin. To refine this strategy, we can incorporate the RSI and Bollinger Band signals. When the RSI falls below 20, oversold, it might signal a potential bounce, but given the overall downtrend, we will not use it as a buy signal. When the price touches the bottom of the Bollinger Bands, it could indicate a potential rebound, but again, we will not use it as a buy signal due to the prevailing downtrend. The portfolio will primarily rely on the short position strategy with an entry price of $349, a stop-loss price of $357, and a target price of $327. This approach balances risk and reward while capitalizing on the anticipated downward momentum of Zcash. Based on the historical data and forecast, Axie Infinity shows a clear uptrend. The price has been consistently moving upward, breaking through previous resistance levels. The RSI values have frequently crossed above 70, indicating overbought conditions, but the price has continued to rise, suggesting strong bullish momentum. The forecast data for the next week projects continued upward movement, with prices hovering around $2.2 to $2.4. Considering the support price of $2.09 and the recent resistance of $2.91, a strategy focused on capitalizing on pullbacks to support while targeting the 2.5 to 2.9 range seems optimal. Therefore, I recommend a combined RSI and Bollinger Band strategy. We will initiate a long position when the RSI dips below 30, signaling an oversold condition, with an entry price of $2.26. The stop loss will be placed just below the support level at $2 to mitigate potential losses. The initial target price will be the previous resistance level of $2.63, aiming for a quick profit. If the price continues to rise and breaks through $2.63, we will adjust the target price to $2.9, maximizing potential gains. This strategy combines the momentum identified by the RSI with the volatility bands of Bollinger Bands, offering a balanced approach to high-return investment in Axie Infinity.